Everybody, welcome back. Mike Fairborn here for market and sector analysis. Hope you're having a good day. We'll take a look at the markets here. Quite a bit going on. I want to make some comparisons amongst the market relative to sectors specifically, and I want to actually compare sectors to themselves. What has the performance of sectors been? Just a really quick way to do that. I think it provides a lot of insight as well, though. But I will look forward to going into that with you all, folks, and welcome to each of you. We do have here with us today Life in the Fast Lane. We've got Kenneth, David, around Buffalo. We've got Chuck, and Will. Welcome to all of you. Good to have you on board. Any questions, comments you have, throw those in the chat so we can address those for you. Joining the chat, a good friend of mine, Mr. Kevin Horner, does a great job in the classes that he teaches in the morning. If you haven't attended that class in the morning, or we do look at basically Trader Talks in the morning, he does such a great job with that. I encourage you to do so. We start the day off with Kevin Horner, and folks, you can follow us both on X, Kevin Horner CS, Mike Fairborn CS. We'll look forward to it, to having you on board, folks. Hello to you, Beth, as well as BJ. Good to see you. And let's dive on into some disclosures. I'm excited to get going here. Information here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as sole means of investment research. Paper money software application is for educational purposes only. Investing involves risk, including for some products more than your initial investment. Always be mindful of that. Futures and futures options trading does involve substantial risk. It's not suitable for all investors. Some additional points listed there on the bottom of the slide. Past performance is no guarantee of future results. Quickly, too, historical data should not be used alone when making investment decisions. The STAX is not a tradable index. The STAX should not be used as an indicator or predictor of future client trading volume or financial performance. So with all that, let's dive on into it. It is so interesting, kind of keeping an eye on the market and seeing where we're at. There's just so many fluctuations throughout the day, right? As we come over here and just look at, generally speaking, what we've got over here. I've got a few futures products listed as well up top here, but you can see, what I just generally will do is look at this throughout the day, and it has been moving quite a bit. One key area that I keep an eye on is just the percent changes over here and seeing how we're doing. One of the quick notes I wanted to highlight, I talked about this in my swing trade class yesterday, and actually a little bit in the ThinkScript class as well, is just looking at what we've got here on a shorter term time frame, and it did actually make the move we were looking at. I'm going to pull it up right now. This is the chart that I use for a daily 30-minute and a 5-minute. If you just arrow to the right into a 30-minute chart, this was in fact the trend line that we were talking about, off the bottom or off the top. Let me kill this one for now. I already got an alert on that off the bottom. But what we were saying, first of all, actually I should show you what I was looking at yesterday. Just as a quick note, this, if you really break it down in terms of what we were seeing on the market here, we had this really big move up. And then from this time, and I've seen this happen a lot, when you start to trade within the daily range of the candle, and that was a big candle, but we were kind of holding in this upper range up here. When prices get tighter, basically what you're getting is, in fact, just that compression of price, and that is oftentimes seen as a triangle type pattern here. And actually, you can see the break that we got right here. Normally you break up or down. What I was saying yesterday is a lot of times you'll tend to break with the direction of the underlying trend. That was a new low relative to the price. This is a lower high and a lower low. Back up one more time. Sorry, but here you can see the underlying trend. Very, very important, folks. If you're not doing anything else, and I always told, when I started trading early, I always said, hey, I'm a trend follower. I like to follow the trend. And then it came, I think somebody was asking me, hey, what was the direction of the trend? I actually didn't know. I just said I was a trend follower. If you get used to focusing on the trend, it can be helpful on pattern breaks. A lot of times when you're getting a triangle, for example, setting up, oftentimes it will break in the direction of the trend. The trend is down. It broke down. We didn't know if that would happen. Sometimes it breaks up, but if it breaks lower here, that's one thing you can kind of keep in mind, right? That it might retrace a little bit lower, and we'll see what happens here off this move. I did want to retrace just that really massive day that we had over here where we spiked up so big, and put some Fibonacci levels on it, just so you guys are aware of this. I only bring that up because that was a day where the Dow had a range of 3,500. Never seen that before. But here is your 50% level. I just sometimes will anchor these points, potential levels of support and resistance here on the chart, with some of these big Fibonacci levels, oftentimes the key levels that traders will look at, the 38.2, the 50, and the 61.8. That is that massive bar on that day. That was all one big bar. And we've been trading within that bar. And so it does make just general sense, because we had so much volume and so much activity. That was the pause on the reciprocal tariffs going out. You know, it's interesting to put fibs on there and see where you might get some anchoring. The 50% is oftentimes a big level. And on that 50 right here, if I back out of it, so I can see it a little bit better on the right-hand side of my screen, notice there was a big gap up we had right there at 50. We also went down below it quickly, but then we held it as a second level test before we ran up higher. That could be of interest right there, the 50%. That's coming almost exactly on, I'll put it up here, 5,200. If you're looking at short-term moves, too, just to be mindful of it. Drawing tools are slow again. 5,200 is right at the 50, and then you get real close to 5,100 for the 61.8, which, interestingly, is where prices stopped on the pullback, and there was a little bit of a gap up right there as well, gap up through that level too. Okay, so just be mindful of those two. We'll see what does happen. A lot of times traders will look at a longer term pullback. You can still get a pullback here off of a triangle if it breaks back up above, sharply above the 38.2, or tests below the 50, breaks above the 50. These can both be positive areas, a positive indication that traders will look for a rally. The problem is when you start to close below that 61.8, and that carries even more meaning now, because not only is it 61.8, yeah, that's my candle bar right there. Not pretty, but a close below the 61.8 level right there. If you do that, a lot of times what traders will say, and they've looked at, is they said, well, that just suggests that there's going to be more weakness. In other words, there's less of an expectation of a move that closes below the 61.8 to then also go back up higher again. Now, that's just speaking technically in terms, there's a lot of news that can impact the market. Obviously, trade deals could do that over the next 90 days. Is there, a pause on reciprocal tariffs? There could be some positive trade deals. There could be some negatives that can move the market as well. But a close below this level here, which is the 51.28, approximately 51.30 range, would also be a close below an intraday low right there. So not only does it have that 61.8 potential for a failure and for prices to go down, 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 it's also below that intraday low, which is a big point to keep in mind. Clear this off so we could just see this again. But that's what we were just exploring, is this big bar here. We just did fibs on the big bar because it's a significant bar. It can mean a lot. And it looks like, the market is really responding a lot to what's happening out there in the news. I mean, it's just driving it's driving a lot of the big moves for sure are tied to tariff news, tariff information. So having said that, this is what we've got. If we did pull back on a bigger scale, this was a bear flag that we'd seen over here. I'll just draw it in real quick. So this is kind of a bear flag. You got the line over here, and we met our retracement down here as well. It's not to say that we couldn't bear flag again. If that's the case, always be mindful of this key support level down here, which is the Fibonacci 50 and 61.8. Let's go to a bigger term scale so we can take a look, broadly speaking, at, let me go back to my daily over here. I'll flip this over here to our SPX, and I'm going to take a look at the weekly chart where I'm getting these Fibonacci levels, the 50 and the 61.8. They culminate off of these points. If you draw them off this low and this low to this top, you're going to get a 50 and a 61.8 that show confluence right there at that point, exactly where we bounced. So there could be support there. Let me just draw your attention over here too. right at the prior high. So getting some information there in terms of the possibility of a bounce. Now, what I wanted to look at, and we've talked about this before, if we just scoot over one more to the right, really, really big scale. I'm going to go into the simple moving average. I'm going to get smart one day and do it the way that Kevin does it, where he pins it. But I'm just, I don't know. I'm set in my old ways. I've got to get some new ways to get that up there where he's got the moving averages all in place. But that is there, the 13-month moving average. Again, it had been written, we talked about it by a number of people. Hey, it captures a number of bull markets and bear markets. Bull markets, if you're trading, if you get above it. Bear markets, perhaps, if you get below it. A lot of this is going to be due to, what kind of news we get. It's kind of unusual because we're getting a big sweeping tariff. And so we'll see how the news impacts that. It's great to have 90 days to see if things can get worked out. But ultimately, we are below the 13-period monthly moving average. You can see we held it right here near that 5650 support. But if I back out, well, what do we have? There may be, in fact, sort of a range in here. It's kind of a pinball action can happen between two key levels of support and resistance. This 5650 has a lot of correlations with the volume profile up here as well. And you can see that's exactly where we stopped. We had been looking at this 5650 for a while now, and we're watching it on this candle. It turned out when we dipped, we came right back up to the 5650, and we're still in that range. And that's why I'm still just keeping it there, and we'll see how we unfold. Now, this is the thing that I think could be kind of a better indication that we're making progress, at least in terms of the longer term. That would be clearing key resistance, let's say, for example, right here at 5650, which would also be possibly a longer term correlation like we saw over here, getting above the 13-month weekly, the 13-month average. If we're looking for bullishness, we're probably out here. I would say there's going to be a lot of choppiness through this range, maybe bullishness up here, if in fact we're using those. I'll just put bull, oh gosh, bull up top and bear down below if we get below the lower point. But in the meantime, if we're in the middle there, you could expect some volatility in the form possibly of, well, we know what that would be. You could also look at the VIX over here. Anytime you're above that 25 to 50 range, right in here, I'm just going to put it out. There had been some studies on this. So 25, to 30 or higher, you get a lot of volatility. In fact, you don't get like the daily moving averages. A lot of times prices will just break up and down. They won't even respond to them just because you're getting so much volatility, so much movement. The thing I'm going to say about the VIX as well, look at this high right there. It kind of correlates exactly to that low. It's interesting. I've seen this for years, but I still think there are indications of support and resistance that can come up on the VIX at certain points, and we're right off that 30. So anything higher in this range is just more volatility, where your standard daily moving averages might not be as responsive. The longer term ones, they might be a little bit more helpful. Okay. All right. Well, that's the market. There was a lot to say on the markets. We spent just a tad more time on it, but that's what we do in this class. We look at markets for sure. Let's look at some of the others. NDX. So NDX, going to be very, very familiar. I think the key one is the Russell, that has really been, the Russell's a little bit different. The market itself has this kind of a move. We've got a lower low and a lower high, but then the Russell has, well, it's got a lower low, lower high, lower low, lower high, lower low, possibly lower high over here. Is this forming possibly into a bear flag here? So the Russell really kind of showing the weakness thus far within our group. If we look at some additions to the market here, I wanted to go ahead and take a look at, well, let's look at some of our standard indicators that we like to focus in on as well. as we've come down here. Okay, great. All right. So here is the pullback we've got within the advanced decline line. First of all, too, quick note, we said with the McClellan oscillator last week, Mr. McClellan himself, Tom, I think is his first name, actually, Tom McClellan, says, hey, if you're going to go below minus 100, which we did, and then climb back up above minus 70, which we did, then he says 2 to 3 weeks of a potential reversal or change in direction. Now, sometimes those directions might just mean that it's going to go sideways from this sort of downward trend, because the trend has been clearly down. We've been dipping. He just says, hey, we might go sideways. It could be reversal. It could also be 2 to 3 weeks to the upside. From that point, let's use the early point because we didn't hit it initially. We hit it right there on that bar. So we could still say we might have, actually a couple more weeks left, a week and a half to a couple more weeks of a possible rally. We'll see what happens on those intraday Fibonacci levels that I'd shown you, perhaps too. The other thing too, we're getting just a little bit of a move off of the bottom, and that's all we really got with the summation index. What you really like to see is this kind of a formation where prices are, the summation index is really starting to kind of get a move to the upside. Because then you can get these longer term moves too. But hey, we're not going down anymore. I can say that. Of course, yeah, well, we've been going down for a while, right? And this can keep going down. So this is kind of like cumulative. But it's, you can see where we're at. It's just barely moving up. Lastly, the advanced decline line did dip with the market. It didn't dip as much, but comparing advancers to decliners using the NYSE specifically, you can see the advanced decline line still kind of going flat. Now, what would be interesting is if we started to climb higher here. I don't think we're going to see that unless there's some announcements with tariffs with some other countries, maybe some major countries. There's a lot of investments that are going to be made in the U.S., but particularly with tariffs, that's going to be one thing they're going to be looking at, which is a little bit different. But that's something to keep an eye on too. If that were to show some strength here, well, that can be a leading indicator for prices up top or possibly even a dip lower. In other words, if we were to make a new low on the advanced decline line, as we're just kind of, staying within that sideways channel, as I mentioned, then we could start to maybe test these bottom levels. And that might be an area, an early indication for us to look at. Again, though, the NYSE is a bigger barometer, right? It's a bigger basket of stocks, about 2,700, but it can be very, very helpful in terms of leading or lagging. The equal weight, very much the same. It kind of reminds me of the Russell a little bit. Lower lows, lower highs, lower lows, lower highs, rounding over again over here. So still some key baskets that are leading the way within the market here. Now, looking at a 5-year weekly, one of the key points that we wanted to highlight here as we go on this class, on this screen, I should say, is the Hindenburg-Omen, which again looks at 52-week new highs, 52-week new highs and lows being made at the same time. And if you have a large number of lows relative to highs, or it's a close read on the two, those start to creep up. What can happen is you start to get a fracture in the market, and then oftentimes you can get a trend down that continues. Case in point over here, notice on a weekly chart, we dip, 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 just kind of like we're doing over here. This dip, I had to say, is a little bit sharper, obviously, but it's really the recovery we're focused in on. When we recover up here, do we see a large number of stocks in the S&P 500 that begin to hit 52-week new lows on this recovery right there? Let me highlight this range and try to point that on down. Do you see the Hindenburg-Omen spikes come up? That can be a very, very interesting indication of the possibility that this is going to be a lower high. Okay? It might happen up near resistance if it does over here too. I mean, you can always keep an eye on resistance as well. But notice what we did. We just rounded over and we went down for quite a bit longer. These are weekly bars. So this is not a shorter period of time, folks. Always be mindful of that. Always be looking up here, whatever you're focused on. These are weekly bars. So this went all the way from really, this was like the first part of April all the way to October. Or what are we talking about? 6 months of a downward move. Yeah, before the trend really kind of changed over here. And we saw this is right over here where the 13 period uh, monthly moving average started to break higher at a very interesting time, right after the trend had kind of changed too. So, anyways, let's see if preferably we don't get that, but we shall see what we get and watch the spikes. It's the week after week after week, which is very, very interesting. In other words, you're seeing a basket of stocks that continue to make new lows. That would be indicative, wouldn't it, of like bad tariff news? Because since tariffs are really kind of driving the market. So keeping an eye on the news at the same time, the news cycle, that could easily tie into what we're kind of showing here. Now, this was the NYSE new highs. Quickly, what I'll do, this only really makes sense to monitor the highs when you are making new highs. In fact, we saw prices clearing the 250, I should say, not prices, but the number of NYSE, again, the bigger basket of stocks making new highs over on a 1 year basis. So they're making new highs every time we broke above the 250. The markets made a new high, a higher low. We didn't do it over here. And that's, as we were tracking this, we said, no, we didn't get it here. And guess what? That's exactly what we did, a double top. The new highs did not show up and we dipped. And when you're making lower lows and lower highs, the next best thing to look at is not the HGH, but the LOW, which stands to reason, right? Looking at the lows. So these are the number of stocks that hit a yearly low over here in that basket. I mean, a massive move, but using the same kind of 250 guideline that you can see over here. And in fact, you see the correlations to it even here? See right between 3 and 200. Look how many touch points we get. Or very close. 1, 2, 3, 4, 5, 6. So if we start to see a spike up here as we're dipping, then perhaps the likelihood is that it does continue lower too. So there's just another read. We like to get a number of different reads out there on the breadth of the market, and you get that breadth when you're looking at just a larger basket of stocks. But remember, you got to flip this one to the lows. I can't even see the low over here. What did I do with it? That's not it. Okay. It was $ NY just low. LOW, as opposed to HGH for the high. We're not there yet. We've got a little ways before we start using the HGH again, everybody. But we'll see what we get. We'll see how it all comes together. I just think it's going to be so much tied to news, though. What do you guys think? It just seems like that's driving much of our, definitely the short-term moves out there. All right, well, here is a look at our seasonality. Seasonality is, well, with the tariffs, it's way out of whack right now. But one thing you can look for is the possibility of, if prices were to somewhat start to correlate over here with the seasonal time frame. Again, this is a 10-year view of the S&P 500 index. I'm going to show you where you can find that. It's right over here under style. And then you just go down to seasonality as opposed to standard. That's where we are. And then you can go and check any time frame. Remember, this is January to December. This is the average moves of the market over that time frame in red. This is 2025's moves in the market in the red. So you can see the difference there. But a lot of times, yeah, if you're getting a correlation where you start to see it starts to look like, what you might see seasonally, then it might start to react like it again. But I just don't know. It's really difficult with where we're at right now. Okay, by the way, the last one we looked at here, which what we actually looked at first today, I kind of tied it in, was the S&P 500 index, and that was the break lower. And just watch the Fibonacci levels on this as well. Okay, a quick note, what is the price move or the price target for a triangle pattern? You take the biggest move and you added or subtracted to this move here. Let me just see if I can do this. Yeah, it's very close to 1, 2, 4, right down through here. That would put us, if it does fulfill a full triangle, it doesn't look great right now, but if it fulfills a full triangle pattern, price projection, I'm just taking the highest point to the lowest point of the triangle formation, then that would put us below the 61.8 because we know that this level is a key level to keep an eye on, just above that 5,100. All right, let's see here. Kevin's hitting the chat. Awesome. Let's see. Earnings will have an impact. I think that's a good point. Earnings are fast. By the way, a quick note on earnings. Just pull this up right over here under calendar. And yeah, I've just got the S&P 500 in here. It's kind of nice to track that. You just click on the wheel. You can go right down into the public folder. Another good use for that. I remember Kevin and I talking all the time when we were doing hosting that joint presentation, joint class about the Thinkorswim platform. But I remember this so distinctly well. We went in here. You can click on any of these, and then you just go in, and there you go. There's your 500. I think this is a good one to look at. The NASDAQ 100 might be another interesting one to keep an eye on. Great way to get that information because we are entering earnings season, right? In fact, what do we have up? This week were the financials. In fact, it kind of starts off with the financials. There's Bank of America, Goldman Sachs, Citigroup. Good call. I'll try to send out some tweets on this as well. In terms of what companies are beating earnings, I like to send that out. You know, just when I say beating earnings, I'm saying they're beating the surprise number right there. There was a beat right there. For example, what do we? Yeah, Citigroup, $1.83 to $1.96. This can be a key driver. By the way, something cool that you can also look at too are earnings expectations going ahead for the S&P 500 basket. I don't have that data though, but that'd be kind of a good one to look at. Sometimes if I can get it, I'll tweet it out for sure. All right. Well, let's see. I wanted to pull up the Stacks index. This is, we read that disclosure on the Stacks right here. Oh, let's just pull it up. Let's say explore the Stacks. And what the Stacks shows us. And so the Stacks, this is the Schwab Trading Activity Index. And I just want to highlight just a key point with the Stacks. And you'll notice that there were a lot of basically, you know, a large group of investors, obviously traders, that were participating in the market. There's a lot of good information in here, like top buys, top sells you can see that are listed in here that are tracked through Schwab. And there are great details along the bottom. Like, for example, you know, what is the Schwab Index, Trading Activity Index? What does it track specifically? How is it calculated? It's looking at a basket of, a sample month of retail, individual, and self-directed investor clients, and Schwab's got a big base of those, right? Just generally speaking, but it does give more details on that. You know, then we use a proprietary method based on holdings and positions in each portfolio to give a score. All right, let me send this out to you just in the chat so you've got it. This gets updated every month. I think the most interesting thing is, and what do you guys think on this? You know, this is like participate. You know, you can see there were a lot of participants over here when the markets were hit right around 2020, the recovery there. But after that pullback that we saw really in 2022, we just did not see. We just saw a lot of individuals not participating in the markets. Now, is that because perhaps there were other uses that they had to use? I mean, I should say they were using the money for something else, for example. We know inflation was really difficult at that time, but one thing we can say is there just wasn't the participation that we saw out there. One other quick note, too, just on the Stacks is notice how, looking at a divergence basis, we hit a high there on the Stacks, but that was about right there. The market continued, so that says that we just had less participation after that point, and it's been going lower even after that. So just broadly speaking, wanted to highlight that for you. Now, I'm going to pull up. I got this from Kevin. I give him full credit for it. Looks probably just like what he's got, but great way to look at sectors. I've got 11 of the S&P 500 sectors in here with the S&P right down here at the bottom. Okay, what's been happening with these? One thing I talked about yesterday is consumer staples kind of defensive. You know, you just kind of look at it. It's a great way to get a sense of what's been holding up a little bit better. Look at consumer staples. This was one that came right up yesterday to the pre reciprocal tariff, or I just said, yeah, I should say reciprocal tariff announcement. It was pre that announcement. We came all the way back to those levels. It's kind of defensive in nature. So is healthcare, but healthcare didn't come anywhere near it. So still down on healthcare. You can see lower lows and lower highs pretty much across the board, really kind of reflecting what we're seeing in the S&P 500 index over here. Okay, so that could still be an interesting area because it's holding up. Now, I'm just going to do this. Let's go big picture, and you guys tell me if you might see something here. Sometimes bottoms will form off different price patterns. But if I was looking at this price pattern, just maximizing the sell here, I could go shoulder, head, shoulder. I've seen a lot of these bottoms form like this. They look very similar. Now, there's no guarantee we'll get it, but I mean, just, you know, if it comes down here, it kind of looks like that. A shoulder, head, shoulder. This portion, very, very familiar to me. The rest, it really depends on what we're looking at. It's really not defined as a head and shoulder pattern until you take out really the neckline, right? Up top here. And by the way, you know, actually, there could be a sloping trend line too. Wow, I drew that as a diagonal on my mouse. I never do that right. But that just gives you a general sense that right in this area here, one of those two, this will continue sloping lower. So even if you were to break up higher, you might get a move to the perhaps, you know, we'll see what happens, but you could get a break and it could form a formation there. But I mean, it could make sense too, because it is happening in a defensive type sector. But the one thing I wanted to do today was look back at this time frame and make a comparison on these companies. And this is a great example for this one right now. But if we were to go back just using, oh, it's off the side of the screen. I'll do it over here. So notice that the pre-reciprocal tariffs are within, let's say, half a month's time frame. That's 12 days. We're looking at about 14 days or so. I want to just take a look and see what has been happening over there in terms of relative performance. Okay, so let's do this. I'm going to right click. I'm going to go down and, just up top, hit the arrow. There we go. It puts us right back to where we were. So let's go right into the Market Watch tab and go into our quotes. And here it is for the 1 week time frame. Now, this is 1 week time frame. I'm going to see just what percentages we've got in total, because I want to measure, you know, the last, let's say, 14 bars, pre-reciprocal tariffs, so we can encompass that whole area and just see what's doing the best on a percentage basis, looking at those sectors that we're just focusing in on there. Those are the 11 right there. If I right click and customize this box, I can come over here and I can actually change the script to it, the Think script. And notice this Think script here is, we're looking back at a 5-day look back period, which is a 1 week. Now I can go more than that. In fact, I can go 14 bars if I wanted to. I have to change both over here to make this function. But I'm going to say it's good. Okay, I'll just change the whole darn thing. 14 day percent. Okay, let's click on this so we can just see what is leading. We saw the charts, and that's very, very helpful. But what are we getting here? There it comes. And what's really leading and lagging over that time frame? Okay, leaders there. Okay, so the chart was kind of in line. It was in line. There you go. That's the consumer staples. It's down, but it's the best down of all. It's about, you know, minus 0.2 as it's showing right now. Okay, and then you've got utilities. So keep in mind what responded the best over this time frame, because what you're seeing here, and I'll even add one more, and we'll top it off with the healthcare, even though that dipped quite a bit down to 6. This over here, what we're seeing in 14 bars, could be indicative of what you might see over various bars into the future. Okay, so you might see it continue. That's how these trends start when we're kind of in this sort of a phase, right? Very volatile in the market. In other words, if we were to look down the road 60 days later, you might see something very similar here too. In other words, it could be giving us an interesting indication of what to focus in on. And so you can look at a lot of different charts there. I pulled up one yesterday in the swing trade class that I teach, which was this one, which is the Mondelez, MDLZ. So notice it's down today, but notice there's sort of a bullish type possible flag over here. And the possibility of, well, a sideways range, and I put a little trend line across the top. There are earnings there too, but it falls squarely in a defensive area. These guys do, the Oreos. Okay, people like their milk and they like their Oreos during high tariffs. I don't know. They like their consumer staples in general, but we found a few of these companies in here. The Money Flow, for example, too, very strong, well above prior highs in price. I mean, we're above these levels relative to price over here, which using the Money Flow is traders will use it. Oftentimes they'll just say, well, that means we're going to break above this high. That's what they'll say, right? And this is one of the indicators that I like to kind of keep an eye on. It's interesting. It nets out buyers versus sellers, buy volume versus sell volume. And you're starting to see that in the consumer staples. I'm just getting at this fact that it's performing better too over this period of time. Now, the other one I wanted to look at is, let's take this away. I want to compare the stock to itself, and we do that with the RSI, Relative Strength Index. So checking out the RSI over here, you could see the RSI, a comparison to its own self over the last, you're going to love this, over the last 14 days, which is exactly what we've got here, 14 bars. What's leading the pack? Did it line it up right? It did. So I'm just saying relative strength to itself. We only have one above 50, and that happens to be the consumer staples. But notice, isn't this interesting? The percentage moves over here do not have to match. They do not have to match the RSI. It's a different calculation altogether. It's based upon how that stock has been performing relative closing prices, highs and lows over 14 bars. This just looks at percentage moves over that time frame. It does not have to match, but yet it does match. Okay, look at that. You're still getting those top four. These could be defensive. In other words, they could be 14 days now, but they could be down the road, higher as well. And it's those swing trade timeframes that I think traders might find interesting, like this particular stock that we were looking at, like a 3 to 10 day move. If it were start to move, this is one we highlighted in this class. I'll just show it here if you guys are interested. This is the swing trade class that I do teach for it. We've got, here is the main class right here. I'll go ahead and just put that into the chat if you're interested in it. But there are some others in there too that we looked at. There we go. Throw it down here. So, okay. There are some others in there that we talked about that I think are interesting as well at this time. In fact, just a quick note, we did the squeeze signals over here, and that's just using the TTM squeeze. I actually have the TTM squeeze right over here, which just looks at volatility compression. And anytime you're getting those triangle type patterns, folks, that's an indication of potential compression. I talk about this Think script code. By the way, these aren't guaranteed for timeliness or accuracy. They just, as long as the information coming to the platform is good information, then, it should be fine. But just wanted to make that note. But if I come over here and look at the S&P 500 on this will show us that just high compression on a few different stocks. And it's just kind of fun to see what is out there and what is, there we go. These are the number of days that it's been in a compression mode. In other words, a tighter range. And sometimes when you get those tight ranges, bam, you can snap out of those ranges as well. You can shoot a little bit higher too. This is, yeah, I think I sent that. I did. I did send that through. Okay, good. Uh, yeah, did I did? I think so. Yeah. Okay. Anyhow, yeah, take a look at those if you want. There are some great classes over here that Kevin teaches as well. Be mindful of that. You can find this under our playlist, folks. Be sure to subscribe to our Trader Talks channel. Love to have you on board. Just bottom right-hand corner of the screen. Be sure to like presentations if you do, in fact, like it. That is the objective to get that there for you. But there's a bunch of Kevin stuff over here. Yeah, Trader Talks in today's market. That's the one he does every morning. And also, you'll notice over here, trading breakout patterns. So I encourage you to take a look at that as well. All right. Well, with that, I think we're all set. Oh, let's do this. Let's look at a few of these real quick, just in the last couple of minutes that we've got. Just to highlight, some of these have really been in the sideways channel for a while. Now, what I find interesting when you're getting compression, price compression, what's happening over here is you might want to also see what sectors are in that compression, because we talk about sectors here. So let's go ahead and put the sector right after this, and we should be good. There it is. And now you can see a number of these. So look at this: consumer staples, healthcare, materials. In other words, we're not getting a lot of price movement here either. What this is basically effectively showing us is we're getting a kind of a move like this. We might have seen more price action over here, but more recently, it's in a tighter range. And sometimes when you get a compression of a tighter range, you can look at the trend of that and anticipate a move up or a move down. Sometimes, traders, like I said, they'll like to look at the direction of the trend with that. Higher trend, for example, and that's of interest to them to see if they get a breakout or not. Okay, but this is what this is telling us. That class over there is where I talked about that. It's a couple classes ago, 2 or 3 classes ago. Yeah, just the squeeze. So I go through details on this, and you got some information on it. But anyhow, folks, this is what we reviewed today. We did go through and we looked at the general market. Let's go back to it. Yeah, just go SPX right here. Oh, by the way, one last thing. I wanted to see the ES over here, the S&P 500 index, E-mini S&P 500 index futures, what we're getting in terms of indications with the money flow, generally speaking, broadly on the market. Because remember, we do not get volume on the S&P 500 index. So what are we getting? Well, what's interesting is this gap down in price, as you can see. Look at that gap in price, folks. It's pretty big. But look at the gap down in the money flow. It's not as big. It's just a very little dip. And we've actually been kind of trending up. But you can't get an early indicator if you break lower or you break higher above, let's say, a prior high before prices do the same thing. So just park that in the back of your mind too. A cool little tool you can use. There's a number of different volume indicators. I'm just using one of them here. But all right, on that note, folks, really appreciate a like if you liked it. And we didn't see a survey, so be sure to subscribe. Thank you so much, Kevin, for your help in the chat. Great to have you all here today. Hope you found this informative and helpful. I look forward to future discussions with you. Everybody have a great rest of the day. See you next time.